You're going to have more inflation. You don't want to own bonds for sure, and you kind of don't want to own stocks. I mean, the last big period of inflation in the United States was the 1970s. Stock market kind of went nowhere. I mean, the approval of the ETF was a huge deal. The currency is going to fail over some period of time, whether it's 5 years or 15 years. I mean, this happened in Brazil, it happened in Sudan, it happened in Zimbabwe, it happened in Germany after World War II, it happened in Russia. So when Bitcoin came out, I mean, I was aware of it when it was $1 or $2. I was like, we tried this, it didn't work.
Larry, the global financial system, it's flashing red. Some experts are saying that we're staring down the barrel of a collapse that could make the GFC look mild in comparison. People like my mum, many others, are planning to retire in the next decade. They're wondering, how do we protect what they've worked so hard for? It's not about hypotheticals anymore. It's about survival, sound money. It's not just a concept, and Bitcoin isn't just a speculative asset anymore. It has become a necessity. I want to unpack with you why today. For those watching, Lawrence Lepard runs an asset management fund and has decades of experience navigating financial markets. Lawrence, let's dive in. What are we missing and how close are we to the edge at the moment?
Well, that's a great question, and nobody really knows the right answer, Sean. First of all, thank you for having me on your show. I always enjoy talking to you, and it's amazing we can talk from opposite sides of the world. My evening is your morning. The sun is going down here, and it's coming up over there. So look, the math of the problem is getting more severe. I mean, they're being forced with every intervention. This is I mean the monetary authorities, principally the Fed, but others as well, are being forced to print more and spend more. And as you'll see in the book I'm about to put out, we're kind of, it's accelerating, right? I mean, the GFC, we printed a certain amount over a longer period of time. COVID, we printed more quicker. And the U.S. federal debt doom loop, the federal budget in the United States is really in rough shape and getting worse. And in spite of Elon and Vivek saying they can solve it, my evaluation of the math suggests they can't. They can make it better, and that's a good thing, but it's really bad. So how much better they can make it is unclear. But somewhat embedded in your question is how much time do we have before the system comes unwound? And I don't really know. It could be a week. It could be a couple of years. It could be probably all the way unwound. It's maybe 5 or 10 years. But I think we are going to have some kind of a financial crack up in the next year, say, year and a half. And when we do, I think that they'll come in with the fire hoses of liquidity, and that will fuel the next round of inflation. I mean, we had obviously very high inflation with all the COVID stimulus and the money printing. We grew the money supply 42%. And I think that, we're looking at another one of those, maybe, obviously not driven by a pandemic, probably not driven by a pandemic, but just driven by, whether it's a stock market collapse or a commercial real estate collapse or bank troubles or, there are a lot of possible triggers as you look around, but I think something will break. And the Fed, and probably the bond market is the most likely thing to break as this inflation starts to continue to creep back in, as it appears to already be doing. They're going to see that they really haven't got inflation under control. And the bond market's going to say, oh, we don't like that. So the U.S. government, who lives by selling bonds, is going to have a hard time selling their bonds. And if so, the rates are going to go higher. Higher rates are going to mean more interest expense. More interest expense means bigger deficit. Bigger deficit means you got to sell more bonds. I mean, you see where I'm going. It's a doom loop. So, I think that's kind of what's in our future, whether it be in a month or two or 6 months or maybe a year and a half. But I kind of think a lot of things are coming to a head right now. So I would guess that sometime in the next year.
Hey, and say that's a little bit scary. That timeline's accelerated quite a lot since our last couple of conversations. I guess, number one, why is that timeline accelerating and why is it brought forth?
Well, I think it's really that, the inflation hasn't come down as much as they hoped it would. And the bond market hasn't interest rates haven't retreated as much as they hoped they would. And therefore, the deficits have gotten larger. I mean, the biggest thing that the government's done is, when COVID came along, they took the spending from 4 trillion to 6+ trillion, 6.5. It went up like 30%, and okay, fine, there's a pandemic, it's an emergency, great, you got to spend more. But one would think, okay, the emergency is now over. Let's go back down to the 4 million. No, we've stayed right up at the high numbers. And in fact, it's getting worse. And, recently it got very much worse because the, existing administration spent money and everything they could in order to try and keep their jobs. And of course, it didn't work, but, it saddled us with, we're now up to $36 trillion in debt. So I think that's the biggest piece of it. And then, you've got this new administration coming in, and look, there were much better choice than the alternative, but it's not clear to me that they completely understand what's going on here. And there are a lot of contradictions in what Trump is saying and doing, and there's no easy way to square the circle. It's they're kind of trapped, and so to me, what it means is that monetary debasement, more money printing, just like it has in the past, it comes in waves, but it's coming. We saw a lot of it in the '08 period. We saw a lot of growth in debt during when we had ZERP from '08 to 15. We saw a lot of it with COVID. And, right now we're kind of in an interim period, and we're going to see more of it. And I guess another clue, Sean, that makes me think it's the case is that, the two fire alarms for, money printing and monetary debasement and future inflation are gold and Bitcoin. And gold and Bitcoin are both at record highs, right? And so the market is telling you, hey, and by the way, bonds haven't done particularly well. And in bond terms, last 3 years, gold's up 180% relative to bonds, and Bitcoin's up 3,000% relative to bonds. And so, the long bond used to be the base of the entire financial system, and it's kind of burning or leaking or falling down, however you want to describe it. And that's a real problem. Because what it means is if interest rates go up and people aren't buying the bonds, okay, as Alan Greenspan and others have said, the U.S. can never default because we've got a tool. Bernanke said it. We've got a tool called the printing press. So they will print to buy those bonds. It's called yield curve control. They will put them on their balance sheet and they'll mouse click the money into existence. But the world knows what that means. That means there are more monetary units chasing the same goods and services. And so guess what happens? The price of the goods and services go up. And so it's a cycle that's very damaging. And the only way to try and get it under control is to raise rates again. But if you do that, you're going to have a big recession. And, it's a messy situation. But to me, what it translates, you asked before the show, kind of what does it mean for, people who are retiring and seniors and, people more in my age cohort. I'm 67. You've got to have monetary debasement insurance in an environment like this. I mean, I think one of the mistakes that I think a lot of investors are making today, and I talk about this in the book too, is that we had a really nice period of deflation from 1980 to 2020. You had all kinds of things driving that. You had China coming on with cheap goods. You had just a lot of positive tailwinds. But I think we shifted in 2020 when we started printing all that money. And I think that trend, at least for a while, I think the world is thinking we're going to go back to that trend because it was a 40-year-long trend. And perhaps eventually when we get on sound money, we might. But right now, my belief is that we're in the counter trend period for a while here. And so, we're going to have more inflation. If you're going to have more inflation, you don't want to own bonds for sure. And you kind of don't want to own stocks. I mean, the last big period of inflation in the United States was the 1970s. Stock market kind of went nowhere for 10 years. It was like a 4% annualized rate of return. And so, and by the way, related point, in the United States right now, the stock market is at bubble levels. I mean, again, all driven by the distortions of zero interest rates and quantitative easing that just shoved all this money into the system. And all that money getting shoved in is what, of course, creates inflation. But if and when that stock market bubble bursts, their tax revenues are going to go down. Companies are going to cut back. There's going to be larger unemployment. There's going to be larger social spending. The deficit is going to get worse. The bonds are going to get harder to sell. You can see where I'm going with this. It's going to be a mess. And eventually, the Fed, everything looks. I mean, they've got a hammer and everything looks like a nail. That hammer is the printer, and so, they're gonna turn on the printer again. They've got. There's nothing else they can do. I mean, they're not gonna sit around. In 2008, Paulson was down on his knees begging to Pelosi to give him the money for TARP because he said the ATMs wouldn't work if he didn't. And that's kind of always been their get out of jail free card. When the financial system doesn't work for the rich people, they turn around and screw the rest of us with inflation by printing money. And that's a pattern that's very well established since we went off the gold standard in 71.
Yeah, I've gone sort of down that rabbit hole, Larry, and read quite a lot of books. And it looks like every time there's a crisis, they fire up the money printer, and then it benefits the people that already have assets, those that are already well off. And what I've really noticed, just like even in this small town that I live over here in Australia, is the gap between the haves and the have-nots is like really grown quite a lot. And like the middle class, whether it's systematic or it's by design, the middle class looks like they're shrinking and they're moving to the lower end.
I don't know if I have the ability to share my screen, but there's a chart that I've got in my book that's really great.
Yeah, of course you can. So just down the bottom, it says present.
Okay.
If you click on that.
Oh, yeah, present plus. Okay. See? Even a dumb old boomer can figure this stuff out if you coach him properly. All right. You see that?
Yeah.
Perfect. So look at this. This is from 1990 to present, more or less. The blue line is the wealth held by the top 1% of the United States population. Okay.
Wow.
The red line is the wealth held by the bottom 50% of the U.S. population. So basically, the top 1% of this country controls like $45 trillion of wealth, and the bottom half controls like 4. And yeah, isn't that stunning? I mean, it's
crazy.
It's horrific. I mean, talk about wealth inequality, right? And what's interesting, 2 other interesting points to make on this. Look at the line from 2000 to 2008. So the dot-com bubble bursts right here. Okay, 2000 was the top of the dot-com bubble, and it burst. And so what at the time it was Bernanke did, or Greenspan did, was he took rates down to 1%. Okay, and of course, and he encouraged everybody to take out HELOCs and borrow against their house. And of course, they did, and that's what created the housing bubble. But again, so this is the slope of the blue line means you're getting the wealthy are getting wealthier, right? Notice how the slope increased when you took the rate down to 1%, right?
Wow.
Okay. Then you got the financial crisis. Okay, the rich people lost some money there, right? They're all fine, so they went back down again. But then we took interest rates down to 0% after the GFC, right? And the slope got steeper still because everyone could go borrow at 0% and invest in their assets, and their assets appreciated in value, right? Then we had COVID, where they handed out, almost $1 trillion worth of total $5 trillion, but huge subsidies through the PPP program and ZERP and QE, all that stuff, and it got even steeper still. So I mean, you're going to get to the point where the top 1% own everything, and everybody else owns nothing. So I'll leave it at that. But it's just it's a very graphic view of what you were talking about. The middle class is disappearing. Back to your other question. Restate it again on inflation.
Yeah, so definitely in Australia, I'm sure it happens in the US, when the mainstream media are describing inflation and we're getting messaging coming out from the Reserve Bank of Australia. Inflation is coming down. It's not where they want it. They're staying it's still high, but inflation is coming down. When people hear that inflation is coming down, most people from having conversations, from my experience, think that because inflation comes down, that means prices come down. But that's not quite true. So how would you explain what inflation is, like where we are currently, and I guess what will happen if they do another money printing and like reignite inflation?
Yeah. So, well, what you're describing is people look at price level and don't think, economists think, well, if the rate of change used to be 9%, which it was at the peak in the United States, and now it's only 3%, which they argue it is now. And we could get into how all these numbers are flawed. I mean, there's a lot in the book about that too. Shadow government stats shows that the numbers are probably half of what they really are. But anyway, leave that aside. What's going on is inflation coming down means you're just not getting burned as badly as you're getting burned. Things are still getting more expensive. They're just not getting more expensive as quickly as they were getting more expensive. So that's all the difference that's taking place there. The inflation really, it's pretty simple. I mean, they try and make it complicated, but it's not. It's really just a function of printing the money. I mean, you've got kind of a fixed amount of goods and services in the world. You've got people who want to work. You got companies that can build things, and think of it in terms of like a game of Monopoly. If you suddenly gave everybody twice as much money, they'd be in a position to bid twice as much for every property because so the price of the properties would go up 100% because everyone's got 100% more money. I mean, that's really all it is. But the problem with it is that the people at the top, the wealthy and the smart, who understand this game, they know how to borrow cheap and they know how to buy assets that will go up and get pushed up. And we call them cantillionaires because, after Richard Cantillon from the 16th century, who basically coined the term that the people who get the money first benefit at the expense of everybody else. So it takes a long time for that wage earner to get a higher minimum wage. Whereas, the minute they take the interest rate down to zero, the smart guys on Wall Street go borrow money for 0%, put it in something that yields 20%. I mean, if you and I could do that, we'd be rich. We'd be billionaires, So, and that's the core unfairness of the system. And I mean, you're serving me up, you're serving me up a platform, and I hope you don't mind to pitch my book on
No,
because this is
go for it. I'm
exactly,
an avid reader. I think it's
yeah,
important.
this is exactly what my book talks about. And the whole point, I think, as we talked pre-show, the whole point of the book is I want everybody, with people with zero financial knowledge, I want them to understand how they're being screwed and why the system is rigged against them. And I want them further to understand what we need to do to fix it. And we can fix it. Returning to sound money will fix it. But it's going to be a fight because the people with a lot of the levers of power, they don't want to fix it because it's working for them. They're rich. But we got to fix it, and there are a lot more of us than there are them. So what will mess up their game is having an educated public that demands that we change it, and there are people who want to change it, even in politics. I mean, Robert F. Kennedy, understands this, and he wants to change it. He couldn't make it as an independent candidate, but he is at least a part of the Trump administration, and I think that there is. In the United States, you do see change. You do see things going in the right direction slowly, slowly because, as much as Trump was much better than the alternative, he's got a few pieces wrong, in terms of what he's thinking. But that's okay. I mean, I think we talked about this pre-show as well. That the beautiful thing that's going on here is that the internet and technology and the ability of two guys to talk halfway around the world and podcasts and all this. I mean, Joe Rogan and Tucker Carlson are becoming more authoritative than CNN and CBS because, people are beginning to realize that, those mainstream networks lie to them 24/7 and they want to understand the truth. And so they find an alternative, they get the truth, and then they vote with their feet. And, that's just going to keep happening more and more and more. And those, the liars are going to wither away because people, the saying my dad used to use, you can't piss on somebody's leg and tell them it's raining. You know what I mean? I mean, they're gonna figure it out. So it is what it is, and it's going in our way. But it's. I mean, I wish it would go faster. We all do, right? Yeah.
Yes and no. I think anyone that's prepared now, that's obviously been buying Bitcoin for a while, they're okay. I think they've got their ticket to safety. So for anyone on a Bitcoin standard or even gold or silver to an extent, on a sound money standard, yes, we want it to go faster. But in fact, Larry, I don't want this transition to happen fast because people simply aren't ready. There's
I agree with you. I mean, and it's sad. I mean, if this train really leaves the station, I mean, and it could. We talked about this earlier too. We don't know how fast the train's going to leave the station, but look, now owning one Bitcoin is within the realm of possibility for a lot of people. Not everybody, but a lot of people. But when Bitcoin goes up 10x from here, it's going to be damn hard to own one Bitcoin. If you're just a regular person. I mean, and Bitcoin is going to go up 10x from here, in my view. Now, we can debate over what time frame. I mean, there's a lot of debate about that, and I can see both sides of both arguments. But it's going up, and yeah, I agree with you. I mean, I don't know. There's I'm of two minds on this, as I am on so many things. I mean, the one is let's just collapse the whole damn thing and get it over with, rip the Band-Aid off, return to sound money, and the world will be a better place. However, if we go in that route, there are going to be a lot of people hurt who
Yeah.
don't, get on board along the way and adjust, give them time to adjust. Um, the alternative is we go slower and more people get time to adjust, and less people get hurt because a lot of people have taken the steps necessary to protect themselves. And so there's an argument for that as well. I mean, I think you're younger, so you could probably live with either event. I'm older. I prefer it to go faster because I want to be here to see it.
Yeah.
but but look, to me, it's going to unfold over the next 10 years. There's going to be a lot of change in monetary affairs. Things are happening really quickly now. I mean, things that I just never could imagine happen. I mean, the approval of the ETF was a huge deal. I mean, Larry Fink at BlackRock, the biggest asset manager in the world, embracing it. It's a huge deal. What Michael Saylor is doing with MicroStrategy, basically, hoovering up the entire bond market, that's a huge deal. I mean, it's, sovereigns probably buying it. We know El Salvador, but we know there are probably a few others too. That's a big deal. I mean, the Loomis bill to have a strategic Bitcoin reserve in the United States, that's a big deal. I mean, it's, it's gaining momentum. And, the thing I'm trying to do with the book, and the reason I'm pushing hard to get it out, it'll be out in the first quarter, hopefully in February. It's all gaining momentum. I want to get people to focus on it, pay attention now, because in a year from now it's going to be harder to it's going to be more expensive.
Yeah.
So
So, like, I've got so many questions I want to ask them
yeah, that's all
all
right.
at
I
once.
got answer. I got plenty of time too.
Perfect. Let's dive into the strategic Bitcoin reserve, the Lumnus bill,
Yeah,
nation states buying Bitcoin just in a moment. But there's two people that you brought up that are really sort of come out of the woodwork. Number one was Larry Fink, and the second was Michael Saylor. They're approaching Bitcoin from very different strategies.
yeah,
But first, I guess most people watching this at some stage in their life would have heard of who is Larry Fink. So he's the CEO of BlackRock. Now, why is it such a big deal that Larry Fink's come out and put out Bitcoin ETFs? Like, what's that
well, this
mean
is
for
BlackRock.
financial
For people who
markets?
don't know, BlackRock's probably the largest asset manager, asset gatherer, investment management firm in the United States. I can't prove that, but I think that's true. I think it's like 15 trillion in assets under management. And by the way, a few years ago he hated Bitcoin, and like many people who had done extremely well in the fiat world, he kind of saw this as a threat, I think, and said, "Well, that's no good. I don't like it. It's used by criminals." All the usual complaints. And then what I think happened in his mind, I'm just surmising this now, but it seems logical to me that what happened is he thought to himself, this thing is working and it keeps working and it's growing, and gosh, I got to make a decision. Do I want to ignore this and become irrelevant as this thing becomes more important, or do I want to figure out a way to try and make money off this thing, which seems inevitable? and and obviously he chose to make money off it. I mean, I think he's got the biggest ETF, if not close to it.
Yeah,
Fidelity's up there as well, and they're getting 30 basis points, and he's doing extremely well. I mean, interestingly, and I'm drawing a blank now on the name, but there was another fund manager, maybe it was Vanguard. I think it was the CEO of Vanguard, shat all over it, said they're not going to do it. Well, he lost his job. I mean,
yeah,
because it's you can't deny that it's working. I mean, if you look at the investment performance of this asset class for the last 15 years, there's never been anything like it. And now what's the negative? The negative, as we discussed, there's big volatility, and people who aren't in it and are thinking about getting into it really need to understand what they're buying. And I'll give you a little clue. I bought it at 400. I bought it in the thousands. I bought it at 17,000 in the fall, in the Thanksgiving of 2017. There was a huge price run, and I thought, oh my God, it's going to a million. And I bought a bunch of it. And then it turned around and it went to 9. I thought, shit, did I make a mistake? I studied it. No, I didn't. So I doubled down at 9. And then it went down to 3.5, 4. And oh shit, maybe this thing is dead. And I said, well, in for a dime, in for a dollar. So I doubled down again, at 4. And then I've just kind of continually DCA'd from there on forward. As I had cash, I'd buy it. And so I bought some in the 15s, I bought some in the 20s, I bought some at 60 before the SBF thing, before Bankman-Fried blew up, and then it went back down to 15, and I bought more. And so, you got to be willing to ride these roller coasters, and you got to understand what you own, why you own it. And I don't need it to live. These are my long-term savings. I'll probably end up going to my kids. And I know that in a 5, 10, 15-year window, it's going to continue to go higher. And as you and I both know, anyone who's ever held it for over 4 years is not underwater. I mean, these downdrafts tend to be less than 4 years in length, although they can be quite severe. They were severe. I think they're getting less severe over time. But it's important. I mean, I always counsel Bitcoiners trying to sell their friends on Bitcoin. You need to explain that whatever they put in, they have to be prepared to handle a 50% drawdown and not panic, because that could happen. And if it did happen, it would be a buying opportunity, not the time to sell. And and one thing that is notable is that with each cycle, we hit higher highs and higher lows. And in my book, I actually draw this comparison. I mean, it's kind of like Amazon. Amazon took over the world of retail, online retailing. And, Amazon has had like 10 or 12, 50+% drawdowns, and yet, it's one of the best performing stocks of the last 15, 20 years, if not the best performing stock. So, when you've got something that's new and emerging and challenging the system, you're going to have emotions, and the emotions are going to lead to, oh, this thing's great, it's going to 1 million, and you're going to get some dumb people who are going to FOMO into it, and then they're going to panic and sell it, and it's going to go down and lose some value. And I mean, those cycles are part of the process. And the way that senior people or older people who are getting into this, the way you deal with that is you don't put 100% of your money in this thing, but you put in 10% or 15% or 20%, a number where even if you only have 10%, look, I think this thing is going to go up 10x, and I think it's going to go up 10x again. And that's probably over 20 years. Yep. That's 100x your money today. So, if you put 10% of your net worth into this thing today and it went up 10x, well, you would double your net worth. And if it went up another 10x, you would 20x, that would be great, right? I mean, you're like 2,000x your net worth. So the point is that you've got to have a long-term perspective on it. And I always say the wrong allocation is zero. Even only 1 or 2% of your net worth in it, it's going to make a difference. And if you know about it, you don't put 1 or 2% in. What are you thinking? I mean, there's not a soul in the world that can't afford to lose 1 or 2, that has savings, that can't afford to lose 1 or 2% of their net worth. It's just, there isn't one, and yet, if they put 2% in and it goes up 10x and 10x again, that's going to be, one heck of a return. They're going to be glad they're there.
Yeah.
So, it's something that everyone needs exposure to, but I think you need to look at the risk dial. I mean, those of us who are in it heavily, we're very comfortable with the risk. And, I know 30-year-olds who have 100% in it. I don't have 100% in it, but I have over 50, I have a big number in it, and that's okay. I mean, partly it got there by growing. I didn't start off putting half in, but but it's become half, and I suspect it could become 70, 80, because I'm not selling. If it keeps going up in value and, my gold doesn't go up as fast, which has been the pattern, then, the 50% or 60% I own now is going to become 70 or 80 or 90.
I think what may be real helpful for people listening is it's a conversation that doesn't really get discussed when people are on Bitcoin X or whatever. They're like 100% Bitcoin only. And maybe that's right for somebody my age or that really understands Bitcoin. But in the real world, we should be talking about portfolio allocation. So you're also a very avid gold and silver bug. Both of those sound money. They've got thousands of years of history. So let's take my mum, for example. She'll be retiring in the next 10 years. Doesn't really understand Bitcoin apart from, through osmosis through me over the last couple of years. Sort of can see that as a problem with the financial system, feels inflation in her own life. And just like anyone, this could be anyone out there. That's really everyone out there. But is looking to retire, I can see that the stock market maybe doesn't look that safe. What would be like a simplistic way to be able to approach a portfolio? Because the 60-40 bond stocks, that's sort of dead now. That's dangerous.
Yeah, that's not going to work. That's a bad idea. So I think you got to look at, we're in a sovereign debt crisis based on the debt doom loop that I described before. So that's kind of your starting point. With that
What's
as a
that mean,
start,
a sovereign debt crisis?
it means that the large industrial economies in the world have taken on more debt than they can service. And as a result of that, they either have to let the debt collapse, and this is best described in a book by Ray Dalio, or they have to inflate in order to service the debt. And, because letting the debt collapse creates an outcome that looks like 1929, they're much more likely to run the printing press and inflate to try to get their way out from underneath it. So if we're in a sovereign debt crisis, which I believe we are, and we haven't really seen one of these since World War One. If we're in a sovereign debt crisis and we believe the government's going to print, which I do, then you want to own things the government can't print. So, land is going to go up in value in nominal terms, and stocks are going to go up in value in nominal terms. They have a lot, although I think they're overvalued. But three things the government can't print are Bitcoin, gold, and silver. And the nice thing about gold is that it tends to not be nearly as volatile as Bitcoin. I mean, I think in the last 75 years, the biggest drawdown in gold was coming off the 1980 blow-off peak. It was about 30%. I think in the last 75 years, there's only been two other years where it was down over 20%. And I think 65% of the time it's up year on year. And so the other, drawdowns have been very modest. And so, gold is kind of timeless money that will protect your purchasing power. And it's not very sexy, but it just sits there and it does okay. It's a very good way to save, in my opinion, save in gold coins. So, for your mom, I don't know how much risk she wants to take. I'm not sure what you've counseled her, but most people in their 50s, 60s, 70s, 80s would probably be pretty well suited to maybe go kind of 60% gold and 30 or 40% Bitcoin, 60, 70% gold, 30, 40% Bitcoin. I mean, if you really believe in this trade, I mean, you could also hold some in cash, but that's kind of a melting ice cube. And you could hold some stocks if you believe they're good stocks. I mean, there'll always be certain stocks that do well, even in a bear market. But, in general, the stock market will take all stocks down with it if liquidity becomes tighter. It's an interesting. The stock market's tricky. If you study, and I don't know if we're going to a hyperinflation, but we're certainly going to have we're certainly going to have inflation, in my opinion, and potentially very high inflation. If it becomes hyperinflation, stock market's going to do very well in nominal terms. That is, if you look at pictures of the Venezuelan stock market, or the Zimbabwe stock market, or the Weimar German stock market, they all went up a lot. Problem is, so did the price of everything,
Yeah.
because the currency was failing. So, I mean, stocks do represent a claim on a business. But to me, it's not nearly as clean as one of the things I like about gold. One of the things I like about Bitcoin is you don't have management teams to screw it up. They're both kind of idiot proof. You can, and I think as you're older, the critical thing becomes you don't want to. I know I have clients who are 70, 80 years old. They can't put a lot of money into an asset that could go down 50%. It would devastate them.
Yeah.
But if they get strategic about it and they say, well, I'd like to own some of this asset. I'm going to buy some here, and if it goes down 50%, I'm going to buy some more because I know in the long run it's going to go up. Well, then that's a smart way to approach it. In my view, it's kind of a dollar cost averaging view towards it. So, but I think in every circumstance, it just depends on the person and what they're likely to do. I mean, if you know they're likely, if they don't really understand it and they're likely to sell it if it goes down, then you're almost doing them a disservice by putting them in it.
Yeah.
You know what I mean?
That's why I'm such a big advocate of people reading the books, and I cannot wait for your book, Larry. I do hope to get a signed copy.
Oh, absolutely. Yeah.
That's for sure. I think it's really, really important. Like Bitcoin's this massive concept, and to be honest, and unfortunately it's true, it really takes 100 hours before it starts to click. And I think
It does,
that
yeah.
like the knowledge like that you're presenting, or the podcast, or the authors have tried to condense it as much as possible, and you can accelerate that a little bit, but there's no cheating. Like if you just go out and buy Bitcoin because it's going up and then it comes down, where you're going to sell it. So it really does take that proof of work to be able to jump in. Let's flip gears. So
Yeah.
with Bitcoin proof of work, actually, before we do, and it comes back to proof of work, why Bitcoin and Bitcoin only, not other cryptocurrencies like things like XRP, Ethereum, Solana, whatever? They come out with some really random names. I'm sure that there's hundreds of thousands of them now. Why is
Yeah.
it just Bitcoin
You can go,
and
but you
not
can buy
anything else?
Dogecoin. Yeah. So in my opinion, I call most of those other currencies, cryptos shit coins, but that's probably not entirely fair because some of them might end up developing an application or something that has value. But
Of course.
to me, the important thing that got solved with Bitcoin is, the immutability and the scarcity and the soundness. And then, they did it got such a lead on all the others that even if somebody were, I've often heard people say, well, this is, you got MySpace, what if Facebook comes along? And I thought, well, okay, fine. And in the early days, if somebody had made a better Bitcoin when Bitcoin was just getting going, that might have been the one that won. But now that you've got 200 million users, I mean, this is Metcalfe's law, right? Now that you've got 200 million users and, $1.9 trillion of market value and, a network that's growing consistently, and Metcalfe's law says the value of a network grows at a multiple of, the number of users that are added. So it's exponential. It's very unlikely that somebody's going to come along and change it. I mean, it'd be like saying, well, somebody's going to make a better Google. Well, everybody goes to Google, and everybody who sells is on Google, or wants to, information pays for placement on Google, or somebody's going to make a better Amazon. I mean, it's possible, but it's not likely.
Yeah.
So all these other coins, to me, they have flawed monetary policies. I mean, the fact that you actually have to expend energy to mine Bitcoin is extremely important because that's what central banks don't do. They just push a mouse button. It's mouse click money. And money by its very nature has to be scarce, and so you have to either work hard to earn it, or if you're producing money, you gotta quote unquote mine it. And it's actually interesting that the term is used in both industries. I mean, in the old days, gold was money. Before Bitcoin, it was the soundest form of undilutable money. And guess what? It was hidden in the earth's crust. You had to go mine it. You had to break rocks, and there are a lot of miners in Australia. I'm invested in a lot of them, and so that's a very honorable old business that's been around for a long time. And the gold supply grows at 1.7% a year. Bitcoin does the same thing. The miners are obviously, as you know, just assembling blocks that keep the chain intact, secure, immutable, etc., so that none of us can get screwed. Nobody can get rug pulled because there are 20,000 nodes and there are all these miners competing, and we all agree on what the ledger says. And so, but you've got to expend electricity to earn Bitcoin through mining, and that electricity spent is what justifies the value. So, it's, to me, there are a few other proof of work coins, but they're of no substantial size at all. They're very small. So this
Yeah.
one, Bitcoin's kind of won the race, and I just don't think the other cryptos. I don't mess with them. I know there are people who do, and the people who made money doing it. That's fine. I think there are a lot of ways to lose money in all the other cryptos. So to me, this is a technological innovation that none of those other coins have, and as a result of that, it's going to leave them all in the dust.
Yeah, I agree. And I wonder if you think this is correct, and this is sort of how I go about saying it. The cryptocurrencies, the shit coins, they're like an investment, they're a speculation, more so like a startup company, for example. And it's totally different, where Bitcoin was just engineered to be the best form of money that's ever existed, and then everything else that you said. So they're just different games. If people want to go and invest and find the best altcoin or whatever to do a certain thing, that's fine. But that's a whole profession in itself, where Bitcoin is solving a problem. Like, as you say, fix the money, fix the world. It's just there to be a better money. And yes, it takes a little bit to understand, but if people understand it,
That's the
they can
point.
just save, and
Yeah,
that's it.
I mean, this is really a technological innovation. And I think it's on the scale of, I mean, just to compare it to, it's a car to a horse, or it's, the telephone to the telegraph. I mean, it's air flight, it's fire, it's the wheel, whatever it might be. It's the printing press. I mean, before the printing press was invented, monks wrote out the Bible, and that's how they copied it. And by the way, nobody could read. Only the monks could read the shit anyway. Here we are. I mean, this is just up until this time, basically everybody in the world has been subject to dilutable money for, since mankind began. Money has been dilutable. Now, admittedly, pretty slow in the case of gold. But gold grows. The supply of gold above the ground. There's a lot in the Earth's crust. Grows at 1.7% a year. So that we've got 212 thousand tons of gold today. It'd be a couple of Olympic swimming pools full of gold. And in 45 years, 50 years, we'll have twice as much. There'll be more. And so that's dilution. That's monetary. The soundest form of money before Bitcoin is monetary dilution. The thing that makes Bitcoin so weird and interesting and potentially has such huge upside, and so it's just kind of it's a complete paradigm shift, is that there's never going to be more than 21 million of these things. I mean, it's just like, whoa, hang on a second. You mean to tell me you can have a kind of money that does not dilute? I mean, right now there is dilution. We're adding 0.8%, 0.8% per year to the supply. But as you know, every 4 years that number goes down. And in 2140, the last Bitcoin will be mined. And effectively in another 10 years, we'll be down to the point where, we're at 99% has been mined. And so, the remaining dilution will be negligible. So that's really, really unique. The other unique thing about it is, if you think about, it's been classified as a commodity by the SEC. And if you think about that, because one Bitcoin is the same as another, they're fungible. If you have a Bitcoin, you have a Bitcoin, period. If you look at other commodities in the world, like oil or gold or silver or whatever, when the price goes up, there's a supply response. If the price of gold doubled tomorrow, I can tell you for sure the gold miners would start digging more holes and producing more gold. I mean, that's the way it works. And yet, take Bitcoin. If the price of Bitcoin doubles tomorrow, the supply is not going to change. The issuance schedule is set in stone. It's like, whoa, hang on a second. So wrap your head around that. That's like, they say there's nothing different under the sun. Well, there actually really is. I mean, here's a technological innovation that solved the monetary dilution problem. And I think once you come to realize that, that's part of why those of us who are in it, get so excited about it and say, wow, this is really different. This is gonna, I just gave a presentation at the New Orleans investment conference. It used to be called the New Orleans Gold Show, and a lot of gold bugs there. I asked the question, I said, how many of you guys own Bitcoin? About 60% of the hands went up. I was impressed. Okay.
Nice.
But I was talking about it. And I said, look, this thing's at 100,000. It's going to 1 million. It's going to 10 million. And I heard a couple of people in the front row just scoff like, oh, that's bullshit. And I mean, okay, sit back and watch. I mean, you compound something at 30, 40% a year, we're going to get to 1 million, and then the million's going to become 10. I mean, Michael Saylor's target is 13 million, and within a 20-year window. And so, I think it's going to just kind of continue to eat the monetary world up, because it's a better form of money. It's objectively a better form of money. And as a result of that, more and more people will migrate to it. It's just that simple. I mean, Saifedean said it in his book originally, that history shows that you can't protect yourself against, somebody else having a money that's sounder than yours. And he pointed out how China and India, who stayed on the silver standard, really suffered against America and Britain, who went to a gold standard. And the reason is silver's not as sound as gold. There's a much higher supply of silver, compared to the stock. So it's,
It's so exciting. I guess like the biggest message is it's definitely something that everyone should be paying attention to. And like what we're seeing with nation states paying attention, as you rightly brought up, El Salvador made Bitcoin legal tender. We've got Bataan mining, they hold 1 point something billion worth of Bitcoin that they're mining in secret. One of the campaign promises from Donald Trump was that they'd make Bitcoin a strategic reserve asset. Lumnus is coming out with the bill. RFK was behind it. Like I'm strongly under the belief that politicians won't fix everything. Like they're not here to save us, but maybe they can make things a little bit better for the next couple of years. I guess like is a strategic Bitcoin reserve possible in the US? And what is a strategic Bitcoin reserve? And is it a good thing for the everyday person and Bitcoiners
Yeah, that's a
alike?
great question. This is a very interesting area, and I'm of multiple minds on this one as well. And it's interesting today. There were just some things on Twitter suggesting that Biden might sell some. As you may or may not be aware, the U.S. has
Yeah.
210,000 bitcoins that we've confiscated from various sources over the years, and there was some evidence that some of those had moved, and that maybe the administration was aiming to sell some of that before they left, which I think would be a tragedy if they did it. I hope they don't. But
It's
uh,
sinister.
yeah, it's really bad. But let's go back to the strategic Bitcoin reserve and the whole notion. So there are those who say that if okay, you've got to ask yourself: is the American nation state and is the U.S. government? Do you want them to be powerful and rich? Because there are some people who are anti-status, who actually are like, no, the whole point of Bitcoin is just to tear this whole damn system down and start all over again. So why empower this thing called the government that does a lot of stuff that we don't like by making them rich? So they're, look, if the government passes a strategic Bitcoin reserve, it's going to pump our bags, and there's no doubt about it. I mean, Loomis was talking about buying 500 coins a day. Well, compared to the mining supply, that's a big number. But and arguably you could use it to defease the debt, and so on and so forth. There's a lot of misunderstanding about this topic. I mean, Trump's talking about 100% tariffs. I mean, look, I'm glad Trump won compared to the alternative. Okay, but Trump is kind of a loose cannon in terms of his thought process, and I don't think he fully understands Bitcoin. I mean, he tried to start his own shitcoin. He did start his
Yeah.
own shitcoin, and RFK has a much deeper and better understanding of this. I think Vivek does too, and I think Trump will get some good counsel, and I think those are the guys who actually got him on the side of supporting it, right? Recognizing it's
Yeah.
important, but if we do a strategic Bitcoin reserve, that's going to be very dollar negative. And yet, Trump is talking about wanting, to put tariffs on people who don't support the dollar's 100% reserve currency. Well, as one of the guys, I think it was Jeremy Siegel from Wharton, pointed out on Twitter this morning, how do those two things reconcile with one another? You do a strategic Bitcoin reserve, you're going to kill the dollar by definition, because it's going to push the price of Bitcoin up. And as I said earlier, Bitcoin and gold are the canaries that tell you that the dollar's in trouble. But then it comes down to the practicality of will they really be able to get it done. And Parker Lewis, who's very tight with Senator Loomis and knows kind of the inside baseball pretty well, so it's going to be tough to get this passed. I mean, because of we've got control of the Senate and the House, but not by enough that the filibuster couldn't stop it. And there will be a very, very strong pushback by a lot of the statists who realize that the government buying Bitcoin would definitely lead to serious dollar devaluation. Now, I think serious dollar devaluation would be a good thing, because the fact that the dollar is overvalued is what's hollowed out our manufacturing base and what's caused so many of the problems that we have by trying to be this hegemon. We wouldn't be able to, if the dollar were weaker, we wouldn't be able to pay for a lot of the misbehavior that we've financed in the past. So I do kind of hope it passes, but the flip of that is, do I really want to save this government structure? I mean, if you're really hardcore anti-status, you would almost just say, let's let them just run into the ground, have hyperinflation, and then the new government that we're all going to build, that one will be on a Bitcoin. Well, the Bitcoin will become the numeraire. So look, there's just a million moving pieces. It's very, very hard to see how this is going to unfold. But I think over time, and as you know, I'm sure you've read Jason Lowry's book.
No, I
Company.
can't get a copy of it anywhere. Software, mate. It's
Oh
like
yeah,
the
yeah. Well,
one book.
you can get one if you want to pay enough. they're
Yeah, like
expensive.
$1,000 odd, I think, on,
Oh,
on on
yeah,
some places.
yeah.
Yeah,
But I mean, his point is that from a nation state point of view, if you're competing, you want to have a big treasury in Bitcoin, and I could see that. I mean, I can see. I mean, look, ultimately, I think Bitcoin will become the national currency, and but part of what's in the book and what I think we have to evolve to is much less intrusive nation states. I mean, it's
yeah.
the decentralization that broke, or it's the centralization that broke everything. And we've got to get decentralized. We've got to get the power out of the hands of these guys in government that can start wars and just do spend money. And I mean I feel like my government is like a criminal gang. I'm sure you kind of feel the same way down there in Australia. And
100%.
yeah, and so I mean, I'm very mixed in my belief about whether I want my government to be better or be wealthier. You know what I mean? Because
Yeah.
they might misuse it. I mean, you know what I'm saying? I mean, it's just it's not black and white for me as to how this is going to go and as to what the right path is. I mean, I'll say this: what is black and white to me is that the currency is going to fail over some period of time, whether it's 5 years or 15 years. My medium forecast is kind of 7 or 8 years, 6, 7 years. I think we have currency failure by the early 2030s, and that when the currency does fail, we're going to need to reset to a sound money standard. The two choices are gold and Bitcoin, and I think the U.S. and other countries will be much better served going with Bitcoin because I think gold is not as good.
Yeah.
And so, hopefully we'll do that. We'll leapfrog the gold step. But obviously, as you can tell, the BRICS, China, India, Russia, and even to a degree the Middle East. Although I think the Middle East are mining Bitcoin, but setting that aside, I mean, those countries are making a big bet on gold as well. But they're birds of a feather. I mean, look, gold is going to work. I mean, and Bitcoin is going to continue to steal share from gold. It's going to go up faster. But that doesn't mean gold's going to go down. They're both going to go up in fiat terms because what's going on here is sovereign debt crisis become currency crises, and when you have a currency crisis, the currency fails. That's
Yeah.
kind of the pattern, and we've seen that. It's interesting. I mean, this is not hard. I mean, if you study economics, you look at the history of it all. I mean, this happened in Brazil. It happened in the Sudan. It happened in Zimbabwe. It happened in Germany after World War II. It happened in Russia, the revolution. It happened in China right after World War II. It's happened. I mean, currency failure is not new. It happened in Argentina several times.
Lebanon.
Yeah, it's happening in Lebanon. Right. Yeah. I mean, currency failures occur. They just don't occur at the reserve currency level very often. You got to really screw it up to do it
Yeah.
at the reserve currency level. And we've done a pretty good job of screwing it up. so it might, I mean, it might fail. I mean, whether we have hyperinflation here, I think largely depends on whether or not the blue team gets in there and they put Stephanie Kelton in as the Treasury Secretary. She's the MMT loon who thinks that we can just pay all our debt with printed money and not have an inflation problem. And it's the most asinine thing I've ever heard. But guess what? We might go that way. I think a smarter way to go, if I were counseling Trump, what I would counsel him to do is to do a currency reset, which would be very painful one time. But to basically say, look, we've followed the wrong model. It's Keynesian. We've got all this debt. It's terrible. We're going to exchange the old currency for a new currency at XYZ ratio. And we're not going to inflate anymore because the new currency is going to be backed by gold or backed by Bitcoin or backed by a combination of the two. And you're going to be able to exchange your currency for that. And then the government's
Yeah.
going to have to, by definition, balance its budget. And, if you do that, if you look back at the history of these hyperinflations, these terrible currency events, you can recover really fast. I mean, this isn't all gloom. It's not gloom and doom. This is just, it's broken now. We've got to go back to sound money because if we do, then it won't be broken anymore and the other side will be really great. And I think that's what all Bitcoiners are hoping for, that we get there quickly and painlessly. I mean, it's going to be hard to be painless. There is going to be one-time pain. But guess what? I mean, that's like, I mean, we've been on this enormous drinking binge, of debt for 50 years. And it's like, we stopped, we're not going to have a hangover. I mean, come on. It's
Of
going to be,
course.
there's going to be a nasty hangover, right? So,
One thing I think to maybe like add a little bit of hope in there is if people, while the system's crashing, there is that pain. Like the quicker people can get onto a sound money standard, the less of that pain that they're going to feel personally.
well,
Um,
that's right. That's right. And that's my point. I mean, and you're not going to get a do over. And that's why I kind of, am And a lot of Bitcoiners were kind of emphatic about it, kind of like, come on, guys, wake up. Smell the coffee, read the books, do the work, spend the 100 hours. Because I mean, in 10 or 20 years, the people who had Bitcoin are going to be a lot better off than the people who didn't. I mean, a lot. And so the people who didn't are going to kind of wonder, what the hell happened? So even if
Yeah.
if you're just listening to this podcast, if you're just aware of it, you're probably ahead of 70% of the people in the world. So it's kind of like, okay, get off the dime and get some. You know what I mean? Because you don't want to in investing. You don't want to experience regret. And also, it's very asymmetric. I mean, you can only lose what you put up, and yet you can make. I mean, and many of us have. I mean, I bought coins at $400. I'm kind of glad I did. Do you know what I mean? I mean, and but hey, Max Kaiser bought coins at $2, and I'm sure he's glad he did. You
Yeah.
know, and people think, wow, it's too expensive today at 90. No, it's not.
I'm
Not if
still
it's going
buying.
to, yeah, not if it's going to 900 and then 9 million, which
Yeah.
is what I think is going to happen. So it's not too expensive today. Now
Yeah.
if you're worried that there'll be a pullback, fine. Don't blow all your wad right at first. I mean, buy half of what you'd like to own, and hope that there's a pullback, and maybe you buy into the pullback.
Yeah.
But
Different ways to approach it, but one of the sayings that I love the most from you, Larry, is like the wrong answer is zero.
yeah, oh,
Just,
absolutely. How can
just
you
get off
not
that.
be exposed to this? I mean, it's the best performing financial asset in the history of the world. People say to me, "Well, it's going to blow up." I said, "Why? What's going to change? What makes you think it's going to? Explain to me logically what's going to change this trend." I mean, we got dogs eating the food. There are more dogs, and they're just eating more food at higher prices. I mean, what? Show me the event that's going to make it not work. I can't see it.
The way that I relate it that might help a lot of people picture it is when you probably bought your first house. How much did it cost? Like $20,000, thirty
Yeah,
thousand
a
dollars.
little
How
more
much
now.
is it
Yeah,
now?
like 80 or something. Yeah,
And then like compare that to what it is now. It's the reason that happened is because there's only like so many houses. They print so much money. The house price go up. That one house is one house. But
yeah,
yes, you can make a few more houses. Whereas Bitcoin, same deal. They're going to print money for the rest of our lives, literally until the dollar collapses. It's not hypothetical. It's just mathematical. And that the currency, the dollar's flowing out there. It's just going to go into things that are scarce: gold, silver, Bitcoin, real
houses.
estate.
Yeah,
But yeah, but Bitcoin, because it's the scarcest thing on planet Earth, apart from like an individual human life, and as a monetary good, of course, it's going to go
yeah.
up the most. I've got a couple of rapid fire
Sure.
questions from the community here, Larry. For a little bit of fun, first off, current max deadlift.
Oh yeah, I saw that. Well, I don't know current. I haven't been training my deadlift recently. I'll tell you what it was. I'm proud of this. It was 315 pounds. I don't. Do you guys use kilograms down there or not?
Yeah,
Yeah,
kilograms.
divide by 2.2. But it was 315 pounds. I don't think I could do that today. I'd be in the high twos, probably 280, 290, something like that.
Yeah,
Yeah.
that's still a lot of weight. That's
Well,
100,
yeah, no, I mean,
something kilos. That's a
younger
hell of a
guys
lot.
can get, well deep into the threes and fours, and five is kind of five is pretty unheard of. But I've seen people do 500. But yeah, it's I don't know. Yeah, trying to stay strong. I mean, it's the aging process. I mean, sadly, I've noticed. I started doing this stuff in my 50s, and I was, I was out of shape when I started. I got in shape. I competed for a while, did some cool stuff, and then sadly, I keep showing up. I'm not going to stop ever, but the performance does go down as you age, you know, and the curve gets steeper. I mean, you've got a certain your 20s, 30s, 40s. Yeah, it's all you're going down a little bit, but not bad. Some people are pretty good athletes in their 30s, 40s, and 50s, but you hit your 60, it starts to get steeper. That's been my observation.
Yeah.
So,
Like, how important do you think doing exercise is for older age?
I think it's hugely important. I mean, it's I'll recommend a book that I've recommended to many people many times, but I think it's very important to read, called Younger Next Year.
Younger next year.
Younger Next Year. It's by a gentleman named Crowley. Two authors. I can't remember the other guy's name, but one of them's Crowley. You can find it on Amazon. It sold millions of copies. It's a great story of a guy who was in his 50s in New York, a high-powered lawyer, smoking, drinking, overweight, all the usual stuff. Went to his doctor, and his doctor said, "You're going to die." you know, you're, you keep living this way, you're going to die. And so, he was a very analytical guy, and he said, all right, I got to figure out how to get in shape. So he started figuring it all out, and he came up with a plan to get in shape, and he got into killer shape. And what he found in his investigation of all this is that you can really kind of bend the aging curve. And we've all seen them. You've all seen people who are 60, 70, 80. They're muscular, healthy, vibrant, etc. And we've also seen people who are 60. We've seen people who are 60. They look like they're 80.
Yeah.
Because they haven't done any exercise. They don't lift any weights. They eat poorly. They smoke, whatever. They drink too much. So it's for me, it's a longevity game, right? I mean, I want to make it into my 90s. I think after that, no matter who you are, you're kind of on borrowed time.
Yeah.
But it's clear to me that by getting fit, you increase your health and your longevity odds by substantially. And it's not a casual thing. That's probably the best part of the book is that it tells you you've got to reframe your life. And particularly for men, men think, okay, I got to support my family. I'm going to go to work. That's the most important thing. I got to be a good provider. And Crowley, he hit his 50s and 60s, and he said, you know what? I got to reframe this. I've made enough money. I'm an okay provider. I've got to put exercise as the same importance as work used to be. He basically said, you got to work out every day. I mean,
Yeah.
not every day out of 7 days, but you got to, I mean, you can't just go to the gym twice a week and think you're really going to stay healthy. It doesn't work. You got to kind of consistently, it's like, you can't shave 7 times on Sunday. You got to shave once a day for 7 days. And if you
Yeah.
do it kind of consistently, then the gains really start to show and they start to build up. And so, and that's a mental shift that I went through. Like, okay, because I'd go to the gym occasionally, but not enough. And it was like, no, you got to. And my observation on it is, you got to get into a program. It's just too easy to go to the gym alone and not do the right stuff.
Yeah. I
So
find that hard. I have to go to a class.
yeah, exactly. You got to go to a class. You got to get a coach. You got to go to a class. I picked CrossFit. There's Orange Theory. There are 10 of them. There's people do Zumba. People my wife does Pilates. I mean, there are all kinds of different people go on bikes with go out biking with a group of buddies, whatever it might be. But you need a group of, because there are days you don't feel like exercising, but you just got to do it.
Yeah.
So you need your group to kind of pull you along, and that to me, and because I'm as lazy as the next guy. Don't get me wrong, but I want to stay healthy. So this is the price I pay. It's like everyone jokes when I put my workouts up. It's like it's proof of work. You got
Yeah.
to do the work. You know?
I find the hardest thing is just getting to the gym. But
Well,
once
that's
I'm
right.
there, I'm
That's
there.
exactly right. I mean, when I started off, it was really great. I said, "Look, I'm fat and I'm out of shape. I'm not sure." And the guy he's such a great line. He says, "Just keep walking through the effing door." He said,
Yeah.
I don't care what you do in here. We'll get you to do some pretty cool shit, but just show up. Every day, just show up, and do. Some days you'll do a lot. You feel really great. You think you're a god, and some days you'll feel like shit, and you'll just struggle through doing a little. But every little day you're chipping away at the rock, and you're going to carve a nice sculpture.
I completely agree. So gym's very important, and current deadlift is 315 pounds. That's absolutely amazing.
That's
When are
not
we going
current.
to
I'm below that now. I haven't tested it in a while, so I don't really even know. It's high 200s.
high 200s?
Yeah.
When are we going to see you in Australia? Are you coming to Bitcoin Alive in
Yeah,
March?
I know. It's on my list of to-dos. And when is Bitcoin 11 March this year?
Yeah.
What are the dates in March?
Let me bring it up. Let me have a quick look.
Yeah. I'm taking my adult kids skiing. And every year we try and go skiing in the Rockies.
Nice.
Yeah, it's
I went snowboarding for the first time earlier this year. It was so epic. So
really,
epic.
where'd you go?
It's just down Victoria in
Yeah,
Australia, and
yeah,
I just spent, I don't know, four hours there or whatever. I'd been in a snowboard once inside. I grew up kiteboarding. In New
yeah.
Zealand, they had like this
Oh, yeah.
indoor snowboarding place. But anyway, it was like first time. And then I put my board on and I put the thing between your legs to go up the hill, and I just like fall over straight away. And then
Yeah.
I got like 20 meters and then fell over again on the next time. And then I like weaved my way up there. And from there, it was epic, just faster and faster down the hill.
It's
I think
fun
the
stuff. Yeah,
first,
the adrenaline rush is fun.
oh man, it was real cool. March 8th is
Oh yeah, no, that's what I'm going. I'm going like fifth through 10th or something, so I can't do
yeah,
it. But it's on my to-do list. And when the book comes out, hopefully if I sell a bunch of copies, somebody in Australia say, "Hey, come down here for a book signing," and I'll find a way to get there in the next year or two
cool,
for sure. I've never been there actually. It's a long trip. I've been to Europe a lot. I'm going to Middle East next week to Bitcoin Mina. Um,
nice.
yeah, you should come over here. Are you going to Las Vegas next year?
Probably not. We've got a new company that's just using up a lot of time and resources. This year, I've traveled every month apart from twice. So next year, I think we're going to try pare the travel down a
Yeah.
little bit.
It's hard. I mean, you can spend all your time going to things. I mean, you look at Plan B. I mean, there's so many
Yeah,
cool things to go to. Fred Krueger had a thing I wanted to go to. I couldn't because I was working on the book. I think I'm going to
yeah,
go to Prague. My wife really wants to see Prague, so I think we're going to go there next
nice.
next summer. But
Maybe towards the end of next year, so maybe like around this time next year, if things can get a little bit under control. But we'll see. We'll see what's possible. Let's just get through a couple more questions,
oh, yeah,
and then I'm going to get to the gym this morning. Um, this is a good question. This is a lot about what we talked about last time. How has your view changed on how long they can kick the can down the road for,
yeah,
especially since your What Bitcoin did interview?
yeah. Well, look, yeah, I'm probably not the best person to ask because I thought it was all over in '08, and here we
Yeah,
are, 16
yeah,
years later. Uh, my view is we're in a fourth turning. They tend to last 20, 25 years. The pace is getting quicker. The dollar prints are getting larger. The awareness of Bitcoin is getting larger. I mean, remember, these are the fire alarms, Bitcoin and gold. They're at record highs. As Saylor says, he thinks we're in the gold rush, the 10-year gold rush period of Bitcoin.
yeah,
So I kind of think, I think this is going to get wrapped up in the next 10, 15 years at the most. I mean, I put it at 2030, 2032, 3. This is for Bitcoinization, kind of fiat currency failure. I'll probably, if judging by me having been too early in the past, I'll probably be wrong about that. Maybe they can stretch it out to 2040. But they don't have a lot of levers left. They can raise interest rates again, but that creates pain. It just it look, what happens is when everybody realizes they can't stop printing, it's game over. Do you know what I mean? That's right. I
yeah,
mean, most Bitcoiners kind of intrinsically realize that, and that's why we're here.
yeah,
We know they just can't stop. And so we know what that means, and we know what it means for our asset. And that's why we want to hold this asset they can't print. Okay, fine. But if you look at what percentage we are of the total world, it's still pretty damn small. I
very
mean,
small.
you add in the gold people, fine, they know it too. But what is that? Maybe 5 or 10% of the world now. What's happened is we used to be really small, where everybody else looked at you like you had three heads. I mean, maybe we're only 5 or 10% now, but I got another 20% kind of asking me like, "Hey, what's going on?" Do you know what I mean? And so, we were the super early adopters, and they're about to be the next wave of early adopters. And then, 5 years after that, it's going to be everybody. Well, of course, you got to buy that stuff. Everybody knows that the currency's failing. And I mean, it's just and then it's going to be, you want to be the last one on the bus. I mean, God, you got to get some of that shit because the currency is failing. So, I mean, that's how it kind of happens. I mean, I remember the internet coming around. I remember mobile phones. I mean, any technological innovation, you kind of see they follow this tipping point curve where they get to a certain stage and it just becomes obvious. I mean, I remember when the iPhone came out, and I was like, "Oh, that's nice, but I don't really need that." Well, now it's kind of, yeah, you do need that. you know.
Yeah,
So that's what's going on here. Just another technical development. The world's becoming digital. We know that. I mean, consider that some of the biggest businesses in the world didn't even exist 30 years ago. Amazon, Google, right? I mean, didn't even exist. You know, it's amazing. Or they were just getting started in the early, early days. Biggest
yeah,
businesses in the world. So this is a monetary revolution, and it's going to happen. But that curve is hard to predict. I mean, I probably shouldn't offer any predictions, but What I will say with high confidence, I know which side of that curve you want to be on. You don't want to short this stuff. You don't want to not. That's the get off zero. You don't want to not be here, given the technology and what's going on. You got to be here. Fine. You don't want to be here with all your net worth. I get that. It's volatile. Sure. You don't totally believe. I get that too. I mean, look, there were plenty of times when I was holding it earlier on where I thought maybe I'm wrong. I probably should have bought more. I didn't. I was like, well, I'm not 100% sure. I mean, we went through these block size wars. We went through, there were several forks in the early days that failed. I mean, I went to an MIT conference where I had a core developer, telling me he was worried the thing was going to fail.
Yeah.
I mean, it was in the early days, it was kind of an experiment. But now we got 16 years and 870 some odd thousand blocks, and no failure, and a lot of support and huge hash rate and da da da. I mean, I think the risk of failure has gotten pretty darn low. So
I think that's a good place to wrap it up. I think your message, get off zero, is pertinent right now.
yeah,
It's up
yeah.
to
No,
each and every
I can't
person to.
emphasize that enough. I don't think people will regret it if they get off a zero, even if they're afraid. Just hold your nose and do it. Do it with something that you could afford to lose. And then once you see how it starts to work, you'll be kind of thinking, huh. And then the other thing is, once you start doing it, then you suddenly decide, well, shit, I own this thing. I better read more about it. I better study it. And
Yeah,
once you study it, I mean, like when I first got involved, I didn't know what the difficulty adjustment was. I didn't know what SHA-256 was. I mean, there were all kinds of things about it that, I didn't really even fully understand the halving. Do you know what I mean? I mean, there are all kinds of things about it that I just was like, once I saw those, I was like, God, whoever invented this thing was a genius. I mean, this is really unique, So,
very.
right, and so I think that people, but I started reading to learn those things because I owned it,
Yeah,
but I kind of bought it. I owned it because I thought, well, might be working. I mean, I looked at all the alternative currencies, and they'd all failed. So when Bitcoin came out, I mean, I was aware of it when it was $1 or $2. I was like, we tried this.
yeah,
It didn't work. 6 guys have tried, didn't work. What I wasn't smart enough to do and take the time to do and investigate deeply enough was to understand why this one was different, and this one actually did work. And
yeah.
that's and it took me a while to get confident that it was going to continue to work because of the failure of all the other ones. So that was a setback for me. But it just goes. I mean, human beings. You use mental heuristics. I mean, I try to sell people on Bitcoin a lot, and they go, "Oh, Sam Bankman-Fried, that's all just fraud and bullshit." I get it. I mean, that guy did us a real disservice, right?
Yeah,
Because people, rather than take the time to learn about it, they make a quick mental jump from, oh gosh, I saw this guy do a ton of crypto fraud and he's now in jail. He's a bullshit artist. I mean, they're all bullshit artists. Well, no, not true. That guy was a really bad guy. A lot of us knew it. We were on the stage with him. We saw him at conferences. You could tell he was full of shit. We even tried to tell people at the SEC, but they didn't listen. Probably because he was giving so much money to all these politicians. But it's a technical innovation. People should, if they have a time. I don't know if you've done this. People should Google Michael Saylor Atlas Society speech.
that is so good.
Have you heard it?
Yeah. Oh, yeah.
Right. I
Michael,
mean,
I'll link it in the description.
yeah.
It's
So this is what's so cool about this. As you know, Saylor's an engineer, and MIT trained, aerospace engineer, pilot, etc. What's so cool about it is he looks at it from an engineering point of view, and he looks at it from a technological development point of view. And when he rattles through thousands of years of history and how these technical developments changed the world. And this is just the next logical one,
yeah.
And so it's really worth your time to listen to that. Michael Saylor, Atlas Society. Oh, it was last year, I think. Yeah.
Yeah, I'll link that below. Larry, thank you so much for your time, but most importantly for the work, the advocacy that you
Oh,
do
thanks. Yeah.
in the space. When your book comes out, I'd love to get you back on the show.
Happy to
Cannot
do it.
wait.
The current release date, we're trying. It goes to the publisher the end of December, and which means it probably is on Amazon, in digital and ultimately audio form too. We're going to start off, hardcover, softcover, and ebook, probably in February, early to mid February. That's what I'm hoping for. So, yeah, I'd be happy to come back on, and someday I'll get down to Australia. I'll sign your copy and do a book signing and all that other stuff. But yeah, I mean, the other thing, if people are interested in following me, I make a lot of noise on Twitter, as you know. I'm not shy about my disdain for the central bankers.
Yeah.
It's just I really think they've done us wrong, and that they're the reason why the world's in the mess it's in right now.
Yeah. I think that book that you recommended, the Lords of
Oh yeah, the Lords
Finance,
of
was it?
Finance. That's a really good book. Yeah. Well, there are
The
two of them.
Lords of Easy
There's the
Money.
Lords of Finance by Liaquette, which is that details the last sovereign debt crisis in the 1910s, 14s or so, and that's a great book because it shows what these things are like. But there's a more recent one, and I talk about it a lot in my book. I've excerpted from it quite a bit, called "The Lords of Easy Money" by Christopher Leonard,
Yeah.
which is a kind of a scathing review of the Fed and how the Fed has really messed things up. And what I found most interesting about this guy's a mainstream reporter, New York Times reporter, and his reviews are, from the FT the mainstream establishment has said this is a really great and important book, and you know, it's incredibly,
Wow.
critical of the Fed. So what that I mean, the Overton window on the Fed is shifting. These guys are in a lot of trouble. Everybody can kind of see it. It's just
Yeah.
so it's like get on the train. If given that these guys are in trouble, get on the sound money train because it's like Lynn says, nothing stops this train.
Let's wrap it up there. Thank you so much.
Oh, thank you. Really enjoyed talking to you, and get your ass to the gym.